What is up guys, Taiki here, and in this video I'll be going over why I care more about number go up technology than the actual tech itself. So if you like the content, please like and subscribe and leave a comment in the comment section below. So let's get started. None of this is financial advice, and I will say this is a meme, it's a hyperbole, don't take it too seriously. It'll make more sense as I get later down in the video. So let's get right into it. So let's kind of go over our goal in crypto, right? What is your goal in crypto, right? Like, why did you enter crypto? Why are you in DeFi? Why are you farming? Why are you like buying these things, right? And at the end of the day, we are profit driven, right? We might believe in the decentralized future, and we might believe that crypto will improve our lives for the better and improve the world. But to be real, like, everyone's in crypto to make money, right? We buy crypto because we believe that someone else will buy it at a higher price, and we justify this by creating narratives. For example, Michael Saylor, right? Bitcoin maxi. He's been buying Bitcoin. he's been buying Bitcoin for the past year and a half. And he's like, there is no second best crypto asset. There's a crypto asset called Bitcoin, but it's the hardest form of money, right? It's the soundest money, and you need to buy Bitcoin to protect yourself from fiat debasement, right? How about the ETH maxis, right? Well, they acknowledge that Bitcoin is sound money, but guess what? ETH is ultra sound money. Like, bro, you like sound money? Then you'll love ultra sound money, right? And they've been like spreading this thesis, right? It's like, oh yeah, like gas fees are so high because we burn so much, right? That's why you should buy ETH, right? We create these narratives, right? And we try to essentially say like, you should buy this because it's good for you, right? That's kind of how these communities form, and like they keep pushing these narratives. But for me, at the end of the day, I don't really care why people buy, right? I just care if people will buy and why people buy. If I understand if I understand like the why and like whether or not it'll happen and the probabilities of that happening, that gives me a better opportunity or better chance for me to make money. Because price is an equation, is an output from like supply and demand, and it's our job to predict the demand and supply side of these crypto assets if you want to make money, right? If you bought Bitcoin in 2020, you knew that, hey, like, money printer go over, this narrative will come, and I can front run that narrative by just buying Bitcoin, right? And you just like just hold Bitcoin, right? You hodl that Bitcoin. And I feel like a lot of investors care a lot about the tech, and that's totally fine, right? I totally respect those people. And if you think something is fundamentally undervalued, you can study the tech and make a long-term investment, right? And you can buy something, enter a coma, put it in a cold wallet, like forget about it, and hopefully you come back 5-10 years later and it's like worth like 50x more or something, right? And this is the idea of a good investment. And I feel like people like care too much about this, right? I understand, I understand like why people like want to do this, right? It's like, it makes them feel good. It's like, oh yeah, like I did the research, I was so smart, I outsmarted the competition. Other people were buying this, but I was buying that because it was so cheap, it was so undervalued, right? And I feel like these people are put on a pedestal, and they should be, right? I mean, if they like bought Solana at like $2, then they understood that like this scaling narrative is gonna come in 2021, 2022, and they could front run, I guess, that narrative, and they knew that it was fundamentally undervalued, right? But I don't think this way. Obviously, the tech matters, the team matters, the application, the use case, adoption metrics, all that matter. And I'm not saying that I don't look at those metrics, right? I mean, I consider everything when I enter something new, right? Or like buy or sell things. But there's different ways to think about like why people will buy at a later point. For example, like you can argue Solana was like undervalued at $2, right? Because there was no attention on it, and that's a good narrative. But what are other narratives that could exist in crypto to essentially get people to buy, right? Force people to buy. And I want to focus on the demand side of L1 tokens, because 2021 was a year filled with L1s. I guess my channel grew out of these L1 rotations. Go back to April and May, that was Matic. In July, I bought Luna. August, AVAX. October, FTM. And there's like all these rotations. And I often get questions on like, why would these tokens go up if gas is so cheap? Right? Like, why would these tokens go up if people don't really need to use it for gas, right? And this is like I totally understand this way of thinking, right? I think it's normal to think this way, but these tokens don't go up because people use it for gas, and it's not like that's a common misconception. Sure, that's part of it, right? That's definitely a part of it, right? You definitely need to buy like a few AVAX to like participate in the Avalanche ecosystem, but that like that demand for gas alone isn't going to get AVAX from, you know, $10 to $140 like we saw earlier in a couple months ago. So let's think about like why price goes up, right? Price goes up when people are essentially willing to buy things at higher levels, right? And it's like the simplest way to think about it. So let's think about the psychology and the human behavior, right? On why this applies to L1 tokens. You know, like when it comes to trading, like you can either like trade things based off of like fundamental value, or you can trade things based off of like human behavior, right? If I think someone's going to buy this at a higher price a month from now, then it makes sense for me to buy that thing, right? And if I have good reasons for it, it makes sense. So, you know, momentum farmers and traders, like whatever, I don't really know what to classify myself, right? You know, like I care more about like what will people buy next, right? And there are many different reasons on why people will buy something next. You know, like I mentioned, valuation, or the point I want to make is people sometimes buy things out of pure necessity. And this isn't for gas, it's for other reasons, which I would like to go over. So let's go over a few examples, and then I would like to do a deeper dive on the Avalanche ecosystem. So Phantom, you know, like, you know, fees are so cheap, like why will like anyone buy Phantom? But you know, Phantom went from like 0.01 cent, 0.1 cent, right? So like tenth of a penny to essentially $3, right? That's at 3000x. That's pretty crazy. How about Avalanche, right? Avalanche Rush, you know, a bunch of incentives, you know, fees are so cheap, no one will buy AVAX, but you know, it's doing really, really well. So, you know, why did these go up so much if the transaction costs on these chains were so low, right? And you know, this, I think hopefully, this gives you like a better understanding of how crypto and DeFi works in order for you to be able to navigate the markets better. So the demand, like I said, the demand for these tokens isn't only for gas. It's not only for gas, right? Let's get that point across. It's demand based out of necessity to participate in the DeFi ecosystem. I know there are other value accruals like staking, you know, like securing a chain and whatnot. Yes, but you know, let me just focus on the necessity aspect, because this is like one demand side that no one talks about, that no one really like looks into, right? And you know, I don't think people really understand it, so I'm just like making this video. So let's look into Trader Joe, right? Trader Joe is the #1 DEX in the Avalanche ecosystem. They have roughly like 860 million TVO, I believe. There's a screenshot later, but let's look at the liquidity pools on Trader Joe, right? Because if you're bullish on the Avalanche ecosystem right early on, it would make sense for you to farm in on Trader Joe, right? Because DEX tokens tend to do well, and if you can provide liquidity for these assets and you know earn decent APRs, APYs, whatever, you know, it could make sense, right? It's a good way to gain exposure to the ecosystem, and you'll see that so much liquidity on the Avalanche ecosystem on Trader Joe is our AVAX pairs, right? And this becomes important, right? Because if an ecosystem were to get started, the gas token needs to be very, very liquid, right? If you can't buy the gas token without like incurring like low slippage, then like what the hell, like, that ecosystem sucks, right? And also people view these L1 tokens as a passive way to gain exposure to these ecosystems. So those two factors alone, it's going to create incremental demand for these tokens, right? Because if you want to farm on Trader Joe, you need to buy AVAX, right? And there are so many AVAX pairs on Trader Joe where if you just want to farm something, you just have to buy AVAX, right? It's demand based out of necessity. So you can assume that when an ecosystem experiences capital flow, the gas token needs to be liquid. DEXs will give high rewards to gas token liquidity. Farmers bid the gas token. Okay. Maybe this is mind blowing, but let's get more into it. So yeah, 860 million TVL. You know, that's Trader Joe's TVL. And I just looked up AVAX and looked at the top 10, and 667 million of LP pairs include AVAX, right? So 333.5 million essentially of AVAX demand, right, is essentially created, right? And this is only the top 10. If you go to the farming tab, you see all these new projects, right? All the other projects, like when these protocols launch, like what do they pair the token like with, right? They always pair it with AVAX, right? So you can kind of see where I'm going with this. So AVAX will always be the most liquid pair on these decentralized exchanges. When new projects launch, they will always pair their token to AVAX for their farms, right? Or most projects, I believe. So you kind of see the incremental buy pressure that comes to the AVAX ecosystem. This applies to Phantom as well. When a new project launches on Phantom, right, they're going to pair that token with FTM most likely. And you can kind of see that like, hey, like majority of the liquidity on these DEXs include Phantom. So every dollar that comes into the ecosystem, a big chunk of it will go into Phantom, right? Some of it for gas, some of it maybe for staking, but most of it because they need FTM to farm. They need AVAX to farm. And you know, they need NEAR to farm on even Aurora, even if the gas is free or whatnot. So, as there's like more capital flow, right? Every dollar into the ecosystem, maybe there's like a 30-cent incremental demand, right? 30% of it goes into AVAX or something, right? I don't know what the actual number is, but you kind of understand like where I'm going with this, right? And this demand isn't only for gas, but for liquidity and farming reasons. So this is like the order of operations when it comes to, like the L1 playbook, I guess. So let's say DeFi ecosystem gets started, right? It launches. There's like demand to farm or whatever. As the ecosystem gets built out, the demand for these tokens go up. Then, as demand for these tokens go up, then everyone's like, oh my god, this thing is pumping. I need to buy, right? And it also creates like speculative frenzy in the markets. And if the demand for tokens go up, and if the TVL of the ecosystem goes up, then naturally the value of the token has to go up, right? Because the network is locking up more TVL, and you need more FTM to secure the network, or AVAX or whatever. And as this happens, communities get built, right? As they make money. Why are the Phantom and AVAX communities so strong? Well, it's because AVAX and Phantom made them a lot of money, right? That's essentially kind of the reasons why, right? Why do Bitcoin and ETH maxis exist? Why do Bitcoin and ETH maxis exist? It's because they were in Bitcoin and ETH early. They made a lot of money from Bitcoin and ETH, and they feel like they need to protect the network, right? Because it's like a pledge of allegiance to their bags. And as this cycle continues, people buy for the narrative, and then more people like flow into the ecosystem, and then 30% of like whatever the capital inflow gets used to buy the token, and you can kind of see where I'm going with this, right? And the title of the video, right? I'm not really in it for the technology. I'm in it for the number go up technology, and I don't think there's anything wrong with just looking into the tech to see like, okay, like I don't want to buy into this, but I mean, I have a business degree, right? I went to a 4-year school, not for like, computer science, but for business, right? So I'm not a technological whiz, right? I understand like most of the technology, right? And I understand the trade-offs, but the point I'm trying to get at is you don't have to understand the tech. You don't need to be a technological wizard to understand how capital flows works in the market. Okay, that's my edge. My edge, right, isn't identifying like the scalability trade-offs between like zk rollups, and like whatever, like subnets or something, right? My edge is understanding where capital will flow into in the market. Sometimes I'm right, sometimes I'm wrong. On average, I'm correct, which allowed me to build my portfolio over time. So I consider this number go up technology, because historically it does play out, right? I don't think it's gonna play out forever, right? There's like a limited amount of new L1s that's gonna pop up every single day, and if it's a ghost chain, it doesn't matter, right? Like if no one wants to use a chain, then like this does not apply. So this only applies to chains with like real users, real active users, new projects, new devs, and yeah, that's the end of the video. So hopefully this gives you like a better understanding of like why these L1 tokens go up, because if you kind of just like look at the surface level and don't really think critically, it's like wow, like why are these tokens going up, right? But you can kind of see that like how DeFi works is that if you're launching your project, you need your token to be liquid, and if you want your token to be liquid, you need to pair your asset with another asset, and in most of the time it's the native gas token. And if you look into farms, people would rather farm like AVAX USDT than like altcoin USDT, right? Because it's safer, and there's a lot of demand that comes out of it. So number go up technology, I care more about that than the actual tech itself. I do look into the tech, right? That's important, right? Obviously, but this is just another way to look into the markets. So thank you guys for watching, and have fun farming out there. And yeah, leave a comment if this was useful information to you. Bye bye.